I'm very bullish. I'm not saying it's going to the moon tomorrow. I'm saying the world has changed, and silver is still money, so it has that safe haven aspect. It's tracking gold better this year, whereas it was tracking copper better last year. So I think that's significant too. But actually, I'm bullish on copper as well. And I think that's great for silver. It's got the industrial side, it's got the monetary metal side. If I'm bullish on gold and I'm bullish on copper, how can I not be bullish on silver?
Lobo, Tiggre, welcome back to the channel.
Glad to be here.
I always enjoy our chats, and we are in interesting times at this moment. There's an awful lot going on in the precious metals. I don't know where to start, whether it's gold, whether it's silver, whether it is reevaluation of gold, whether it's the flow of gold out of the UK going into the States, whether it's the continued underperformance of miners with a view to maybe they're breaking out now. I don't know where we're going to start. So I'm just going to ask you to give us your take on the precious metals market at this point in time, and we'll take it from there.
All right. Well, in a way, the key takeaway here is really quite simple. The alpha and the omega right now is Donald J. Trump. And if you need any proof of that, just look, you got an FOMC decision, you've got a new dot plot, you've got the word transitory, of all things, resurrected. And the market moves more when Trump says this or talks about tariffs that. It's really quite striking. And the point of this is, okay, it's no surprise Trump rocks the boat. The point, though, is that that's not going away. This is not just volatility to worry about. This is the theme for the year. And it's not going away. And a lot of people are like, oh, it's all transactional. He's transactional. That's the other T word people like to use in the media these days. And it's all the art of the deal. And, if the Europeans do this, that, or the other, tariffs will go away. Well, I don't think they're reading the tea leaves right. Trump is trying to rebuild, reindustrialize the U.S. economy. Whether that's a good idea in a globalized world, I don't know. But that's what he's trying to do. And that doesn't get done in a month. And I think he actually wants revenue from the tariffs. He doesn't want them all to go away. He wants to pay for some of his tax cuts and things with revenue from the tariffs. It's a different tax regime. So I think this is a major shift. And even if some future president reverses it all, I don't think the Europeans will trust the United States ever again in the same way. And certainly, the global South is, they have no reason to forgive and forget. So the volatility is here to stay. The global emphasis on something besides the dollar, which gets to the answer to your question, gold and silver, is acting like a monetary metal. I see this as a paradigm shift. It's a one-way door. The world is never going back the way it was. And so, it's hard to just say, yeah, gold 3,000, we're going to the moon. It's a nominal all-time high. It makes me nervous to talk about it going higher. But this paradigm shift says that, the game has changed. You can't compare it to how things were in previous years. It is a different marketplace. And I think that long-term sustainable bid under gold is a very important factor that's not going away. And it does limit the downside.
So long-term sustainable bid in gold, effectively, your gold continues to go higher from here. If you consider gold as effectively, it's a barometer of risk. So rather than saying that the price of gold is going up, the value of everything that buys gold is going down. And it is that barometer. We like to look at gold as that way and the best, if not only way, along with silver.
Sorry, I got to jump in. The late, great Richard Russell used to say when people called him a gold bug, he'd say, I'm not a gold bug, you're a dollar bug.
I like it. I like it. But the way we look at it is, gold and silver are that way of you taking your wealth out of the financial system. And because it's finite, the more people that want to take their money out of the financial system, the more dollars or euros or pounds that it will take to actually buy.
And by the way, it works when the lights go out, unlike your cryptocurrency.
this is true. So it has that added additional risk value to it as a
It's
mitigation
a
to it
feature,
as
not a
well.
bug.
Yeah, I like it. I like it. So effectively, are you saying that one, more and more people are going to be turning towards metal to take some of their wealth out of the financial system, and two, that the risks in the financial system are going to continue to increase? Is that effectively what you're saying in different words?
Well, the risks may settle out at some point, but that won't be quick. And
Mm,
certainly not this year. I wouldn't expect it. And by the way, I'm not saying that gold is guaranteed to continue on its current rise. I'm saying that this paradigm shift means that, the government, the United States government, has its gold on its books at $42. And the Pet Rock Club, I think they think that way. That's it, has no useful purpose. It shouldn't even be valued at 42. It has no use at all. So there's an old mindset in the marketplace that $1,000 gold was high, $2,000 gold was ridiculous high. That was a spike. It had to
mm,
go back. Well, obviously not. Um, so I'm not saying gold can't go back from 3,000. I'm saying that this old mindset that thought 1,000 was high,
mm,
that world is gone.
mm,
Even if we get a big retreat from now, 20% retreat from now, that's still almost $2,500 gold. And all but your crappiest, sorry for the technical language, miners should be able to make good money at $2,500 gold. So this is a major change in the world. To what you're saying now, yes, I do think we're starting to see. I don't know if you've interviewed Rick Rule, but one of his
mm.
famous things, the long-term global mean allocation to gold, mean as an average, not mean as in nasty, is around 2%. But recently it's been a 0.5% because
Mm.
gold has been so unloved until recently. And so you don't have to have everybody, stacking gold bars in a bunker in Idaho to move the market. You just have to have a reversion to mean. If people, as you're saying, start worrying about financial disturbances, global trade wars, hot wars, um, you know, there are plenty of reasons to start saying, what, in this world, maybe I could hedge a little bit with some gold in my portfolio. And all we have to do is have a reversion to mean, and that would quadruple the investment demand for gold from 0.5% to 2%. And I think, well, it's a different world. Maybe it won't go back to the global mean. But you know what? If it just goes back to 1%, if people around the world just start thinking, 1%, that's not a wacky number, and a little bit of this, quaint, archaic pet rock, maybe it'll help me out someday. That would double the investment demand for gold to just go from 0.5% to 1%. So, and I do see evidence of that happening. We just saw, well, the soft data. This is the big distinction, we're hearing about in the media now. Oh, the soft data looks really scary, but the hard data hasn't budged yet. So the soft data is that I hear more and more of the financial talking heads mentioning gold. Even the interviewers on places like Yahoo Finance or Bloomberg that couldn't spell gold last year, now they're asking about gold, and or the guests or clients are on there and saying, what are you doing? Oh, well, we're diversifying from the Maleficent Seven. Sorry, I misspoke. The lag seven. Oh, sorry. Anyway, they're diversifying and they're starting, we're doing this, we're going foreign, and we're doing a little bit of gold. Right? It's coming up more and more. So that's my soft data. The hard data is that we just saw North American gold ETFs pull a hockey stick. The latest numbers were a massive surge, not just globally, but in the US, GLD and Fizz and whatnot. In North America, we saw a huge move into gold there. So I can't say this proves that Rick is right and we're going back to 2%. I'm just saying that if in answer to your question, if people are starting to think this way,
Mm.
then the move here is potentially large, and it is durable. This kind of decision, oh, I'm worried about the world. It's not something that I wake up in, a morning and have a hearty breakfast and say, no, everything's fine. I don't need no stinking safe haven assets.
We've seen over the last 18 months this rally in gold, and it's been very much driven by central bank buying and institutional buying. Um, as you say there, the idea that there's kind of a 0.5% allocation to gold, and maybe it goes back up to the mean reverts to 2%, or maybe that only gets to 1%, but it still means a doubling of allocation and participation. The retail investor has been absent nearly entirely from this rally. Um, do you think that it becomes more of a mainstream investment than it has been? Do you think that the retail investor, or what will it take for the retail investor to really start getting interested in gold?
Well, history rhymes but doesn't necessarily repeat. So I'm not absolutely sure that we will. Even the comparisons to the 1970s that we're hearing on mainstream media haven't really pushed people towards gold yet. And it was the obvious thing. What did well in the 1970s? Well, gold and oil, pretty much nothing else. And oil, that was due to a geopolitical shock. Suddenly
Mm,
OPEC became this force of, not force of nature, but this massive market force
mm,
along those lines. So the way I think of it is, whether that happens or not, there's still plenty of money to be made.
mm.
If even, let's say, gold just flatlines for the next few years. 3,000 was a fair valuation for the risk. It's now all priced in. All Trump shock for the next 4 years is now priced in at $3,000 gold. I don't believe that, but let's just stipulate that, right? That is such a great level for the actual business of exploring, developing, and mining gold projects. I mean, the miners are printing cash right now, as people are saying. You can see this. You can see all-in sustaining cost margins are spiking just like gold is. So,
Why aren't they higher then?
okay, well, hold on. Um, so what I'm saying is, there's money to be made regardless. So
Mm,
even if the retail investor never shows up, the better businesses are delivering. They're going to increase dividends. They'll do buybacks. They will reward shareholders one way or the other. To your question, I get that a lot. Well, gold stocks are broken. They're not responding to higher gold. Well, the average gold stock didn't deliver so well. If you look at the GDX in 2024, it pretty much rose along with gold. And why would you even bother buying a risky gold stock or a basket of gold stocks if it's not going to outperform the metal? The metal can't go bankrupt.
mm.
So why would you take the extra risk of bothering with the miners if they're not going to give you leverage to the underlying commodity? Very good question. I think the answer is the last big cycle in the early aughts up to that peak in 2011, the gold miners turned a sevenfold increase in the underlying commodity, I'm quoting Rick Rule again, into decreased free cash flow. And I've charted this. It's true. They took a major bull run in gold and turned it into less money. It takes real talent to do that. So it is
How
not
did they achieve how
unreasonable.
did they achieve that?
Blowout at costs. So their margins shrank.
Mm,
And they also were imprudent in their acquisitions. They spent a lot of money going out, buying ounces, booking ounces
mm.
with now in hindsight, we can say insufficient attention to the quality of those ounces. Not all ounces are created equal. And this time, that market discipline, heads rolled, people got spanked, and the mergers and acquisitions are much more judicious. This is one reason why we're seeing a lot of mergers at the top and not so many juniors getting bought out. People are buying cash flow,
Hmm.
not maybe this will be great in the future kind of prospects so far. So what I'm saying though is that for an intelligent investor who's looking at this, the gold stocks or the gold miners, flubbed it last time. That it's
Hmm.
reasonable for that investor to be cautious about assuming that the higher gold price or the gold dollar exchange rate, as I call it, because gold is money,
Hmm.
that necessarily means that the miners are going to do well. So it was a show me, don't tell me. And the good news is that the better miners are delivering. So several things here. One is even in 2024, the GDX underwhelmed. But if you looked at your better companies, I'm not going to name names, but companies well known for excellence of operational performance, and they did way better. You did get your leverage to gold. And
Hmm.
if you looked at the ones with operational difficulties or even not their fault, like nationalized mines or high geopolitical turmoil, they underperformed. And so the average was just kind of lackluster. But if all you had to do was avoid the obvious dogs, and sorry, they were obvious.
Hmm.
When you're buying in somewhere in the heart of Africa or some, I don't want to offend anybody, former cannibal land gets seized by the government, It doesn't take a rocket scientist or even a rock scientist to say, well, gee, there's high risk here. Maybe I'll go with the one in the safer jurisdiction that's delivering to the bottom line, right? So that's all you had to do to beat the market last year, is just to avoid the dogs. So what I'm saying is the market did actually reward excellent performance last year. If that continues this year, there's every reason to expect that to continue. And if the gold dollar exchange rate remains where it's at now, even the dogs ought to bark this year. It would take true effort, I think, to lose money or make less money this year than last year if gold stays where it is, let alone if it goes higher. So yeah, I do actually think we're going to see more participation. Now, will we see the shoeshine boy tell you about the new, gold coin that he bought, or silver if you can't afford gold, or gold backed crypto maybe in these days? Or is the bartender going to talk to you about his latest gold purchase? That's what happened in the 70s. And that's been sort of an indicator everybody's been waiting for. I don't know that will happen this time. It may not. But A, we don't need it to happen. And B, if it does, hold on to your hats, because we're probably going to 5,000.
Right. And
there's your headline. That was not a prediction. That was an if-then statement.
Depends how we edit it, Lobo. Nice segue into silver there, because you touched on silver. Silver's worth $34 at the moment. It might be higher by the time this video goes out.
No, it's trading at 34.
Sorry, it's trading at 34. Yes, it's trading at $34 at the moment.
I'm teasing you a little bit.
That's all right.
Worth is going to lose you viewers if you tell silver bulls that it's only worth 34.
It may be higher by the time this video goes out. It's still well below its all-time high, just under $50. What's your take on silver at this moment in time?
Well, there's a lot to say there. One is, I don't want to see a spike up to 50 the way we saw the last two times. Those were very, very short-lived spikes. The immediate consequence of that was a very, falling off a cliff. So I don't want to see that. I would love to see silver just continue to
grind higher.
Maybe muddle higher isn't such a great word, but it is tracking gold. And you know what? 34, 35, we've come within kissing distance of 35 several times. That sure beats trying to breach 30. And you know what? The majority of the silver mines that are in production today, those were built with a price assumption between 15 and 20. So again, unless they really put effort into it, all but the crappiest silver miners, they ought to be doing well. They ought to be delivering where it matters for shareholders. And, even the Warren Buffetts of the world ought to realize that, if you like a moat, this is a Buffettism, right? I don't want a business with a moat. Nobody else can just come along and copy my business and take my market share, right? This moat around your business. There is no more better, stronger, natural moat in the world than the mining business. Because even if you make a huge discovery today, by the time you define that, produce a feasibility study, raise the money, get the permits, even with Trump turbocharging permits, in the US, we'll see if that works anywhere else, or even if it doesn't get into the courts here in the US, right? Even if all goes extremely well, you're talking years and years before this competition can come online and meet the market. So mining has this natural moat. So if you're in a place, if you're in a market condition where your mine, your commodity, your mineral, your metal, whatever it is printing cash, or in the gold and silver case, minting cash, right? That is a great defensible position to be in. So, I'm very bullish. I'm not saying it's going to the moon tomorrow. I'm saying the world has changed, and silver is still money. So it has that safe haven aspect. It's tracking gold better this year, whereas it was tracking copper better last year. So I think that's significant too. But actually, I'm bullish on copper as well. And I think that's great for silver. It's got the industrial side. It's got the monetary metal side. If I'm bullish on gold and I'm bullish on copper, how can I not be bullish on silver? And one more thing is that industrial side that many silver bulls pull their hair out because, sometimes silver doesn't do what money should, right? Well, that can be a headwind sometimes, but it can also be a powerful tailwind. Under circumstances where, things settle down, industrial demand's going gangbusters, that's not helping gold at all,
Hmm.
but it does help silver.
So
So, yeah, interesting times.
indeed, and you're talking there basically about kind of supply constraints or inelasticity of supply there, with the fact that it can take so long for new discoveries to actually start producing silver. So you got to
Right. And, and
supply.
and this is more relevant to silver than gold because, as everybody keeps saying, 97% of the gold ever mined in history is still in purified form sitting in one vault or some safe or under somebody's mattress somewhere, right? So that gold could actually theoretically come back onto market. Whereas silver is consumed,
Hmm.
right? I mean, there is some sitting around in some people's safe or, in my case, third palm tree under the left, right? uh, right? But most of it is consumed. So if the supply can't come on as quick as the demand, then you get these price blowouts. That's in fact the times that you mentioned this $50 thing that when that happened back in the 80s, early 80s, and then it happened in 2010. In both cases, there was a perceived supply squeeze. In
Hmm.
1979, it was the Hunt brothers. In 2010, it was the remnants of the GFC and the constraint that was putting on copper and other industrial mines. And most silver is mined as a byproduct of those mines. So there was a perception that, at that time, because of fear, the monetary safe haven side, gold and silver were going like this, but copper production was going down. No, but mines were going on, if not care and maintenance, they were paring it back. And so there was, in both cases, this perception of higher demand, limited supply, silver goes to 50.
Hmm.
So there is a scenario going forward in which that could happen again. And that's not a prediction I'm making, but watch for that. If you start seeing, if this Trump session happens and people start worrying that, the tariffs on aluminum and copper and steel or whatever, if that actually is going to cause a shock that's going to pare back production, that would be a supply shock for silver too. And if that same fear drives the safe haven demand, then that could produce one of these mini manias in silver. I call it a mini mania because they
Hmm.
spike in the way so quickly. But that's those conditions are what took silver to 50 before. And by the way, this is not a prediction, it's just a mathematical fact. If you use CPI, a very conservative estimate of inflation, then you inflation adjust those previous highs, a real using CPI all-time high for silver is in triple digits. Forget 50. We're nowhere near the past highs in past dollar terms. So that's what I would watch for that. But you know what? I don't even want that to happen. Honestly, I would rather see a sustained move forward, a solid business proposition with silver demand for photovoltaics and everything else that it goes into, adding to the safe haven demand. And I'd rather see a steady climate in both my monetary metals over the next 4 years and beyond. I'd like to just see them, two steps forward, one step back, just keep going.
And is that probably more likely a case this time, given the fact that the two times that you talked about before and the spikes up to 50, there was a lot of speculative demand, and those, whether it was the Hunt brothers or post GFC. Whereas now we've got a supply demand deficit, basically, and we've got a massive amount of new applications, industrial applications for silver. So there's a much stronger fundamental long-term case for silver than there would have necessarily been during those two previous
We could
scenarios.
get in trouble if we open that can of worms too wide because the stronger demand fundamentals, the new use cases for silver, they're all on the industrial side.
Mm,
The monetary case is what it is. There's no new case there.
mm, indeed.
So this potential upside here, it's all on the industrial side, which makes your uber silver bulls nervous. And on the monetary side, this gets me in big trouble, and that's why they call me Darth Silver. But on the monetary side, let's say there is a new gold standard. Back in the day, even the smallest you wouldn't want to make a micro dot coin of gold. You might lose it if out of your medieval coin purse or something, right? So you needed silver to make change for gold and even copper to make change for silver. In today's world, that's no longer necessary. Right? So even if we remonetize gold, it actually goes into circulation. You can go to 7-Eleven and buy a Slurpee with a
Hmm.
a microgram of gold. You can do that electronically today. This is a solved problem. So I'm not saying I don't love silver. I'm not saying I'm bearish on silver. I am saying that the use case for silver going forward, the bulk scenarios are all on the industrial side, and on the monetary side, there's actually reason to be concerned that silver may never go back into circulation. In a Mad Max scenario, and there's no internet. Okay, sure. I definitely want to have my junk silver ready to make change if I need to. But hopefully that doesn't happen.
Before we wrap up, can you tell us a little bit more about the Independent Speculator?
Sure. Well, the Independent Speculator is our flagship newsletter, and the central feature is my own portfolio. It's where I put my own money. Well, the misunderstood stepchild in the business is something called My Take, which is actually not really a newsletter at all. It's a database. We cover almost 1,000 resource companies. I have a team that helps me with this. It's independent due diligence, clear evaluations, thumbs up, thumbs down, frequently updated, which can be sorted, if you want, just silver explorers, no producers, right? You could sort for that in the database. So it's a very different product, and it's affordable. So check it out. And then if you don't know about this crazy Lobo guy, there's our free weekly newsletter called the Speculator's Digest. I don't promise that you'll love it, but if you want to find out how I think and what I'm looking at, that's the place to go. And I can promise that if you do sign up, we won't spam the heck out of you. You'll get one email per week, and that's it.
Awesome. Well, what I'm going to do is I'm going to put a link to those in the show notes in the description below this video. And I recommend to anybody to check that out. But for now, until next time, Lobo Tiggre, thanks for joining us on the channel.
Thank you very much.